CN Rail reported a relatively flat quarter, but of course anything that it had to say this quarter will be overshadowed by the fight it's in for Kansas City Southern, a fight that is ongoing. It was the subject of the conference call today, in large part. CEO JJ Ruest is with us now. JJ, thank you for being with us. And let's just start actually with the quarter. We'll come to the merger in one sec, but what does the quarter say to you about where we are in the pandemic, in the recovery, and how CN fits into that?
Well, thank you for having us again today, Amanda. We had a good, strong quarter, and the quarter is basically a reflection of the demand is there in most segments, and the demand looks even more promising for the second half of this year, especially the part of the demand that has to do with the United States. So the economy looks good. We've actually updated our guidance with slightly more volume, and that's why we've also updated our guidance on EPS. So we're positive about the recovery.
And just in terms of your own planning, you did invest in new rail car. Is that a sign of optimism? Was that kind of necessary investment that would happen anyway? Describe what we're looking at there.
So we've invested in new locomotive, which definitely is a sign of optimism as to how much total freight demand it will be for our railroads in North America. We've also invested into a renewal and an expansion of our Canadian grain fleet because we're very optimistic about the long-term future of Canadian agronomics and the long-term future of Canada as an export country for grain. So these are the two of some of the key investments we made here and announced during the first quarter. But the biggest decision we made recently is to put a very solid bid, a very compelling bid to acquire the KCS.
So we've talked about that before. Obviously, things are unfolding here. Central to the kind of debate seems to be, which is the better partner. There is this regulatory question, and I know, CN has a view, CP has a view of which has fewer competitive or antitrust issues. In the end, it'll be the STB that has the view, unless Kansas City just, picks a pony in advance. How do you think that will play out? What's the route, do you think, to clearance for this merger?
Yeah. So in our view, frankly, in our humble view, but we do our homework. We don't go in these things unprepared. There is no unsolvable regulatory problem. Every so-called issues, real or perceived, has a solution to it. And we're very confident. From the financial side, we truly, in our humble view, again, have a superior financial offer between the cash and the stock that we offer. But from a regulatory point of view, you're right. The STB will make a decision. And in our view, we have solution for whatever problem it might be. Some of them we've actually identified. We have a small overlap between our two networks, between Baton Rouge and New Orleans, and other issues, or so-called issues, we're pretty confident there are a solution for all of that.
So one of the first things that came to my mind, and I've asked you this question, and I know others wondered as well, is whether CN wanted Kansas City Southern independently of the CP deal, or whether the CP deal changed some of the dynamics. In other words, if it's to be in your competitor's hands, you need to own it. If it was to be in nobody's hands, you might not buy it, is really kind of the question here. How do you answer that when analysts ask it?
Yeah, so we've been very successful the last 25 years in growing organically and through a series of acquisitions, big and small. We've been operating in the United States for over 100 years. We started with a Grand Trunk Western, and more recently we bought the Illinois Central, Wisconsin Central, the GLT, and the railroad around Chicago. So we do have a lot of experience in making acquisition in the U.S. very successfully, dealing with the STB very successfully. We've always had our eyes back to the days of Paul Tellier. About being the NAFTA railroad, not just by partnering commercially with the KCS to the marketing alliance that we had 20 years ago, but also to at some point making an acquisition. As it turned out, the board of KCS had decided that at this point they'd like to crystallize the value for their shareholders and sell themselves to a strategic buyer, a railroad, not just an infrastructure fund. So now is the time. So this is not a new thought. We've always been looking strategically at different acquisition, KCS especially, and but now we can execute since the KCS board decided that they're quite willing to engage down that path very seriously.
Do you run the risk, JJ, of selling the combination so well to the street and investors that if it doesn't come to pass, you are penalized?
No, I think first of all, we're very confident that we will be able to convince the board of KCS, the shareholders, if and when we get the shareholders vote, and after that, the STB. I think our shareholders at CN They've been asking us for a number of years, what if at some point we would combine with others? And our answer has always been the same, is when we look for acquisition, we always look to create more choice. We want to be relevant to the marketplace. We want to get customers on side. Early on Monday, we filed 400 letters of support for the merger that we're proposing. We also had a couple of hundred since then, and we will file later. So we're about growth. It's a growth story. It's not a story about cutting costs. It's also a growth story at the time when the economy is going to take off, and a growth story that has the customers and the shippers along with it coming with us because they like what we want to create, and they like to have more choices.
There is an open question still about how KCS formally responds and whether CP will raise its offer. Is there room on your side of the table to negotiate here? Is there a sweetener on the CN side if necessary?
So where we're at right now, we have a very superior offer from a financial point of view. There's no doubt. I mean, 325 is bigger than 275. That's the obvious. We have more cash, $200 versus $90. And now that the board of KCS has allowed us, and we're very thankful that they did, to start the due diligence, we will be better educated in, say, 2 weeks from now as to what other synergies that we can create. But at this point, we're very confident that we have a superior offer from a financials point of view. I think the due diligence will help us crystallize that even further. And as far as the regulatory side, we're convinced there's no insoluble regulatory problem. And, that will be dealt in time as well.
So as you look ahead, I know just in terms of this will be ongoing and important for your own otherwise organic growth. What is the most important area for you to focus on here as the economies reopen across North America?
Yeah, as you're right. So as this process unfolds, and it might unfold all the way to the beginning of 2023, we're very focused on our customers, the customers that we serve right now. So we're very strong on the Canadian-U.S. economy recovery, very strong on the consumer side. People, having disposable income. Some people are in the service industry will get their job back and they'll get a bigger salary than just what they get today from the government. So that bodes very well for the container business. And the container business at CN is roughly 25% and growing of our total book of business. You might get to 27, but at some point it might be to 30. And that's on the back of consumables. We're also very bullish about some other things like construction material. I heard earlier that you said that the Canadian dollar is at 81 cents. I think it's because commodities right now are very well priced. Lumber is an all-time high. Strong Canadian dollars or not. They make more profit right now selling lumbers at 81 cents than they were making at 75 cents when the price of lumber was lower. And then you have grain, which is a very long secular story in both the U.S. Midwest, but also in Canada. So we have a very diversified customer book, very diversified commodity book, and we have a very diversified geographic book. And we now would like to be able to really get bigger in the Mexican north-south USCMCA train lane. That would really be a nice fit, a nice complement with what CN has to offer to our customers. More choice, but also choices for the 21st century, which include the USMCA.